Hey, what's up, folks? So in this video, we're going to be going over ITLs, STLs, and obviously I can't go over the ITH, but it's the same thing, just inverted. And we'll do a top-down analysis. In this case, it will be euro dollar. And let's go ahead and get going. So this is for the weekly euro dollar. Last week we expanded lower, and we were going for this area here where we have sell stops, and you can see the market took that area out during pretty much Sunday into Monday, and then today finally there was news events happening. And so, by the way, I don't trade when there's no red or orange news. That's just my rules. So usually Mondays there's yellow news, and I just don't do that. I don't trade those days, and so there's just no need. And I realized it has been a lot better. And plus, I get a Monday off, and I can pretty much work on something else or do some more back testing or something. Anyways, so that's for the weekly. By the way, you can see the weekly fair value gap here came in really nicely. This was on August 12, pretty much 2 weeks ago, heading into this week. So that was pretty awesome to see that. You can see that very clear in the daily what happened there when super nice. And so anyways, here's the daily, pretty much same thing. Took out this area, and this was once again, this was yesterday, and this is exactly what I had expected, where this level was going to get breached. And so when that happens, there's usually a rally that can take place, and with the right narrative, I was looking to buy euro dollar. However, I did not get my specific entry that I wanted. But now let's just continue with that top-down analysis. As we continue, I will show you what I was looking at. Here's the 240-minute. We have a fair value gap from here to here. This one here is actually my 60-minute. If we extend that out, that's actually where this market got up into. And that's really what I was targeting. I know we had this area here as well, right there. I actually did have it. I'm not sure what happened to it. May have accidentally deleted. But anyways, so two things here. We have a fair value gap here, and then we have this right here. Look at this. This is what? Relative equal highs. Especially because Asia session came in here, created the high. London session also created a high that matches Asia session. And London session did not break Asia session. And when that happens, especially with that weekly level being taken, that's a very good indication that the market will go higher. Now, to expand more into the ITLs and STL concepts that ICT teaches, let me drop down to the 15-minute. But before we do, so we have this 60-minute fair value gap, and then we also have this 60-minute fair value gap, and then lastly, we have a small 60-minute fair value gap in here. Okay, and so anytime a market comes down to a fair value area to rebalance, that, according to ICC, is considered an ITL. Okay, ITL or ITH, intermediate low or intermediate high. The other situation is when you have cases like this, when you have the market, going down, goes up, goes down. So there's a little bit, pretty much, of choppiness, of randomness going on. And so that's when all you can do is wait. I mean, if you're trading in London session, you kind of just have to wait, especially because as you get into New York session, you're still in a choppy market. Finally, until you get into New York session a little bit more into after 8:30 Eastern, that's when you finally see some movement going on, and the analysis are coming into fruition. And so this is what I mean. Before stock market open, which is 9:30 a.m. Eastern, you can see the market came in here with the 60-minute fair value gap. It came in, right. It created a low here, created a higher high, a low, high, lower low, a high, and then when it did a lower high, and then it continued higher. So let me go back to this again. What makes an ITL? There's two things. One, when market rebalances a level, that is an ITL. And then number two, another thing that makes an ITL is when you have a short-term low to the left, which is here, and a short-term low to the right, which is like this one. Okay. Now I know you could probably do something like this as well, but I like this one because this was really like the last move, the last attempt where the market looked like it was gonna get through this specific area, and it didn't. Instead, it stopped right there and it kept going higher. Obviously, it would have looked like this, right? And so that's how I know that this right here, this specific low, is the intermediate low. The market should not get passed through this any longer because there's business that needs to get made above before it can even come down here even more, right? Before it can take out this area. And so anyways, once you understand that, now by the way, this isn't episode 12, okay? The only difference is that ICT is talking about it in order to, he's looking to sell. In this case, I'm looking to buy, so it's pretty much just inverted. Obviously, he does another way better job explaining things, but hopefully the way I mentioned it here, I mean, there's really, like I said, there's only two ways, and he mentions that in the video too. There's two ways how there can be an intermediate low or an intermediate high, okay? And that's the way I explained it, and that's the way how he explained it in the video. And so yeah, okay, hopefully you guys are able to understand that and just pretty much see more practice into that and in a live scenario. Or not a live scenario because it already happened, but I mean like more pseudo experience, as ICT likes to call it. And so anyways, the more that you look at the market, the more, and you kind of look back in time, the more you'll be able to see this. But anyways, once that happens, before 9:30 a.m. Eastern, that's stock market open, we finally see the market rally higher. Now, before that though, if you jump into the 5-minute, you see there, when it created the short-term low here, it didn't get through the ITL right here in this area. It didn't get through it. It went above, it rallied high, and then it did what? It created a fair value gap right here. And you can see that would have been an opportunity to buy. And then it created another fair value gap. However, the market did not give a chance to get in it. And then it created another fair value gap here. And then it also didn't give a chance to get in it. And so there you go. Target 1 reached, and then target 2 reached. Now, the reason why I didn't take this trade because it doesn't match with what I do and how ICT taught it to begin with. For example, in order for me to have been comfortable taking this trade, is that this high here should have been broken. Let me draw my arrow. So from here to here, come back down to the fair value gap, go higher, buy here, and then exit here. And so that's how I would have liked to have seen this. I know ICC has mentioned this and has talked about this situation where the market is just, it's not going to go down. However, it's just like up to me. I'm still not comfortable on taking this, but I am watching them. And so what I am grateful for is, even though I didn't take it, I'm grateful that I'm able to recognize this particular setup. And all it is that I'm waiting for my particular setup that I'm comfortable with taking, right? Because we took out sell side liquidity here. I would have loved to have seen buy side liquidity get taken out above this area. And that would have been awesome for me to take, or that would have been awesome to have for the market to do that, and then be able to take advantage to buy, and be able to get in long, not this fair value gap. Either way, as soon as this happened, you can see that even though it did break afterwards here, it was still right below this double top. And so I thought this would have been that other opportunity to get in, but like I said, and as how ICT mentioned, that sometimes the market's not gonna give you a chance. Sometimes it will, sometimes it won't. And like I said, in this case, it did not here. It created a fair value gap, but this thing did not have enough mustard to get in here into the fair value gap and be able to take some profit out there. So that, I mean, to me, that would have been perfect for me to get in, buy here, and then take some profit here, and then the rest leave it running for target twos on this other 60-minute fair value gap. That would have been amazing. And then obviously you can see the market turned around, and right now it's just sideways. So, anyways, if you guys took this trade and that are following ICT, I mean, kudos to you. But like I said, I still have my own rules that I lean on, and I'm okay with that. But like I said, I'm also okay with being able to see this happening live in front of me, and I'm grateful for that. At the end of the day, I know that eventually I'm gonna be comfortable enough to take these trades, and I'm gonna be okay with with the outcome. Otherwise, this was a great day. Anyways, thank you guys for watching, and have a good one.